Mr. Chaturvedi, thank you so much for taking your time out and speaking with us yet again on ET Now. And first up, let's talk about prices, where we've seen palm oil prices rise nearly 35% on a year-on-year basis. Although they've corrected a tad bit over the last few months, help us understand what are the factors that are driving the up move?
In fact, the last couple of months, as far as palm is concerned, or the whole edible oil sector is concerned, has been one roller coaster ride. When the palm oil prices were very low, closer to about 90 rupees per 10 kg in India, or 90 rupees per kg, sorry. That was the time when the government actually came up with the duty and 20% duty. And contrary to conventional wisdom, the prices normally go up in a country by about 50% in our country, or 50 to 60%, and 40% is actually the prices fall in the origination country, which is Indonesia and Malaysia. But contrary to conventional wisdom, this time round, the prices internationally also went through the roof. And that was actually fueled largely by Indonesia announcing that effective 1st of January, they will go in for 40% blending in biodiesel. So all those factors actually resulted in the prices going through the roof. And Indians, or India for that matter, bought very, very heavily. In the month of October, as you rightly pointed out, our imports were very heavy. And I'm also seeing the same scenario as far as November is concerned. November, we are actually at this point of time penciling in an import of closer to about 17 and a half or maybe even 18 lakh tons. And palm oil could be in excess of about 9 lakh tons, soya oil in excess of about 5 lakh tons, and sunflower anywhere between 3.5 to 4 lakh tons. So, which means simply that the worst as far as the prices are concerned is now behind us. Now, with Indian crushing also now taking place, so we feel that as far as the uptrend is concerned, that is now arrested. From this level, the prices could come off a bit. And add to this, the Brazilian crop for the next year also seems to be massive. So soya oil is not going to allow palm oil to go beyond a level. And winter months, palm oil consumption generally comes down. And as you rightly were pointing out on the metal thing, let me share with you something very, very interesting. In fact, what is happening is in China also, they seem to be having a glut of edible oils. I've seen a couple of boats of soya oil actually being traded to India. So these are things which should keep palm oil prices relatively bottled. And the upside now may be very difficult to achieve. Yep.
Those are the factors that is leading to the fall, that is leading to the rise in palm oil prices. And now that you're saying that the upside is arrested, help us understand, do you expect the prices to remain range bound, or perhaps they could decline going forward?
They could decline a bit, because what I'm hearing is that Indonesia might also gradually defer the uh, 40% blending. So this is because with crude oil also not going anywhere and price and the geopolitical scenario improving, so which means the diversion to biodiesel may also get a little muted. So that would mean some more of edible oil available in the system. And soya oil imports into the country are relentless. And Indian crushing, if only we could find a way out of handling a soybean meal at this point of time, I'm sure Indian values can come off quite a lot. But whether they will or not is a $1 million question, and that will depend on whether India is able to find an outlet for its soybean meal. You would ask why soybean meal? In fact, this time of the year, generally speaking, India crushes about 14 to 15 lakh tons of beans. But this time around, we are only crushing about 7 to 8 lakh tons, in spite of the fact that you have a very good crop. And that is because of the heavy influx of DDGS, distillers grain. This is the residue which you get after maize is the ethanol has been removed from the maize, and that is impacting soya meal prices big time. Soya meal prices, which used to be about almost something like 40 rupees a kilo last year, now they are down to about 28 rupees, 27 and a half or thereabouts. So that is putting a lot of pressure, and you can see that in spite of the government's best efforts to make NAFED buy at minimum support price or whatever, the values are much below the support price.
So
This should keep a lid on the prices.
Okay, so those are the factors that are aiding the move, but also reports also suggest that imports have also risen nearly 59% on a month-on-month basis in the month of October, imports of palm oil. Help us understand what are the factors, and do you expect this to slow down going forward, or this is expected to continue at the same rate?
No, we feel that the palm oil imports going forward, November could be again a boom month, because what we are seeing is November, which is now practically coming to an end, the imports could be in excess of 9 lakh tons. But from December, January, we feel the imports might be much more rational. And with importers now bleeding left, right, and center, because there's a heavy disparity between import prices and what the prices are in the domestic market. So we feel imports could be relatively muted. And that would give an opportunity for Indian crush to improve. So we don't see prices going up too much. Prices, in fact, should come off still further. And demand is also relatively sluggish. People thought that India is going to be having a massive marriage season, and they imported hell of a lot. But then the demand looks a little muted. So it's not something which is very hunky-dory as far as the demand is concerned. Yeah.
So demand environment is muted in the domestic environment, demand. But since you've spoken about demand, help me understand how are export demand environment trends shaping up? Since we also export to several other countries, how is demand from other geographies shaping up?
No, what we don't really export any edible oil from India. The only edible oil the only oil which we export from the country is castor. As far as no, I don't think we export any edible oil. So edible oil is a totally 100% import commodity. In fact, we import close to about 60% of our consumption. If our consumption is 26 million tons, our import is closer to about 16 million tons. So export is out of the question. It's only import, and import.
Import, and only import. That's the word coming in on palm oil. Mr. Chaturvedi, thank you so much for taking your time out and speaking with us here on ET Now on the latest trends from palm oil market and the demand environment as well.
If you like this video, then like, share and subscribe to ET Now.